Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Coinbase recently released second quarter 2023 financial results, and really they were pretty good compared to relatively low expectations in the market. I want to go through three positives that I took from the earnings call and the shareholder letter, and why this is still, I think, the best way to play the crypto market today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content and for a deep dive on Coinbase specifically. Check out a link to my show notes. I did a deep dive on my newsletter, Asymmetric Investing, there. And I want to start with the first thing, and that was just Coinbase's performance versus outlook. Coinbase may have been setting expectations a little bit low for the second quarter, but that's probably good because management is building their operational expenses and capabilities for the realities of the business. But subscription revenue actually came in a little bit higher than they had expected. Transaction revenues were in mid-teens. Technology and development and G&A expenses, so this is basically operating expenses, $580 million, far below expectations of $600 to $650 million. Sales and marketing expenses were about right in line at $84 million. But this is the big number. Management is really cutting costs at a much more rapid clip than I think a lot of us expected a year ago. That's a really good sign and ended up flowing to the bottom line. The second thing I want to highlight specifically is the subscription and interest revenue. So subscription revenue is ongoing subscription services. Okay, they break it out into blockchain rewards, custodial fee revenue. That's for things like ETFs or exchange traded notes. This could be a growth avenue in the future, but right now, relatively small business, about $17 million. Interest income is primarily derived from the cash on the balance sheet and then interest from the USDC token that is run 50% by Coinbase and 50% by Circle. So they get a huge benefit from that. That's about $201 million. You can see that that was down quarter over quarter. That's because there was redemptions for USDC tokens. And then other subscription revenue, $29.4 million. So all told, subscription revenue up to $335.4 million from a year ago, $147.4 million. This is, again, not going to be something that's going to grow consistently because developments happen at a very inconsistent space, especially in crypto right now and blockchain. But the fact that these are growing to a very significant number and actually match the transaction revenue for the second quarter, I think that's a really positive sign. The final thing is something that we should be keeping an eye on every quarter, and that's Coinbase's cash. At the end of the first quarter, $5.3 billion worth of cash. Cash actually increased by about $150 million to $5.48 billion at the end of the second quarter. A couple of increases here: adjusted operating cash flow, $213 million. There was also an increase in crypto values, so that increased value of some of the assets on the balance sheet because the company does hold some cryptocurrencies. They also repurchased some convertible notes, so that was a negative cash flow. Otherwise, cash flow looked even better, but they bought those back at a discount, so that was actually a good financial move. So the fact that we're effectively a little better than break even, I think, is a really positive sign for Coinbase. The company is really in this waiting game now where if blockchain technology is going to be doing very real things in the future, whether that's financial transactions or assets like NFTs on the balance sheet, we still haven't built out a lot of those technologies and use cases. So we're in this nascent phase. And if Coinbase in the development phase of building some of these tools for the future is break even, I think there's a lot of potential operating leverage in the future as some of these revenue streams pick up. It wasn't all great news for Coinbase. Trading was obviously down. On a net income basis, the company is still losing money. But I think there were at least some positive signs. If you believe in the future of blockchain technology and some of the capabilities that Coinbase is building out, like I do, this is not a guaranteed investment, but it is a company that I think is a clear leader in this space. So if the blockchain becomes a valuable piece of business in our digital lives, then I think Coinbase is going to play a big role. And it's got the kind of balance sheet and now positive cash flow to get to that positive future. So what did you think of the results? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. And thanks for watching, everybody. See you here next time.